These are 8 top big cap stocks with large percentage gains today. Our review on ACRV. Acrivon Therapeutics Incorporated is a clinical stage biopharma company focused on precision cancer treatments. They're using some pretty next-gen tech with their proprietary AP3 platform, short for Acrivon Predictive Precision Proteomics, which helps identify which patients are most likely to respond to their drugs. Their lead program, ACR368, is currently in a registrational phase 2 trial and targets CHK1 and CHK2, 2 proteins tied to DNA damage response in cancer cells. What's really interesting is how they pair it with a companion diagnostic test called ACR368 OncoSignature to better match patients to the treatment, essentially bringing a smarter, more targeted approach to oncology. Today, the stock absolutely took off, up 43% with an over 25% breakout right at the open. That kind of move usually signals something more than just a technical bounce. There's no fresh press release driving this, so if it looks like a momentum play, possibly tied to broader interest in oncology names or optimism around the ACR 368 trial progress. It also wouldn't be surprising if retail traders jumped in early given the breakout action right at the bell. A move this strong tends to get noticed, especially in the biotech space where sentiment can turn fast on any glimmer of clinical progress, or even just investor buzz. So while there may not be a specific catalyst today, the strength suggests folks are either speculating on upcoming data or just betting that Acrivon's tech has a real shot in the precision oncology game. Definitely one to watch closely from here. Our review on ELPW. eLong Power Holding Ltd is in the battery game, and not just any batteries. We're talking high-power lithium-ion batteries designed for demanding use cases like electric vehicles, heavy machinery, and energy storage systems. They've built a portfolio around tech like lithium manganese oxide and lithium iron phosphate, so that their stuff is meant to last, cycle deep, and deliver power when it matters. This isn't your phone battery. This is grid-level energy storage and EV-grade output. Now, today's move? It was a big one. The stock ripped 43% on the day, with 2 separate breakouts of around 25% early in the session, one in the very early morning push, and another not long after that kept the momentum rolling. That kind of action typically suggests something more than just a casual bounce. Even though there wasn't any fresh headline that dropped midday, the volume and momentum definitely imply traders are starting to circle this one. It could be the market catching on to the longer-term potential here. After all, battery plays tied to EVs and energy storage have been getting more love as infrastructure and clean tech themes keep gaining steam. Or it could be the beginning of a retail-driven move, where traders are looking for the next under-the-radar energy play. Either way, this kind of price strength with no direct news can create a self-fulfilling cycle. More eyeballs, more volume, and suddenly a low-float stock becomes the star of the day. Want to keep an eye on if the momentum holds into the rest of the week. Our review on NCT. Intercont Cayman Ltd is in the shipping game, specifically international maritime transport. They're primarily a time charter operator, which means they lease out vessels for set periods, locking in steady revenue while also offering vessel management services on the side. It's a solid, asset-heavy business that thrives when global trade is moving and freight demand stays strong. Today's stock move? Pretty eye-catching. Shares jumped 40%. And for a company like this, which usually doesn't live in the flashy, headline-heavy parts of the market, that's a big deal. There wasn't a major news release driving the spike, but moves like this usually mean one of few things. Either a big buyer stepped in, there's some speculation about improved charter rates, or traders are sniffing out a supply/demand imbalance in the stock itself. Shipping stocks tend to trade in cycles, and when they run, they can run hard, especially low-float names like this. There's also been chatter in the broader market about tight vessel supply and rising freight costs, which could be helping sentiment here. Either way, this kind of price action throws a name like Intercont onto a lot more watch lists, and if momentum holds, we could be looking at the beginning of a re-rating. Definitely something to keep an eye on if you're tracking small cap plays in the shipping and logistics world. Our review on RYET. Ruanyun Edai Technology Incorporated is a China-based AI-focused edtech company working to modernize the K-12 education system. They're not just another tech firm. They're trying to reshape how schools, teachers, and students interact by bringing in artificial intelligence to revamp teaching, learning, and even how student performance is assessed. And today, the stock popped 34%, which is a pretty sharp move for an education tech name, especially one that operates in such a specific niche. There wasn't a specific press release or announcement driving the spike, but these kinds of rallies often come from a mix of momentum and speculation. Sometimes traders are front-running possible developments like new contracts with schools or changes in regulatory tone around AI or education in China. EdTech has been a hot and cold sector in China over the past few years, especially after tighter government oversight. But when a company like Ruanyun shows a strong gain like this, it usually signals some renewed interest, maybe even whispers of growth traction or policy tailwinds. Either way, that 34% bump puts them back on the radar, especially for those watching low-float, AI-aligned plays in niche sectors like education. Our review on SKYE. Skye Bioscience Incorporated is a clinical-stage biotech company working on next-gen treatments for obesity and related metabolic conditions. Their lead asset, nimacimab, is a novel antibody that targets the CB1 receptor in the endocannabinoid system, but only outside the brain, which is key because it potentially avoids the nasty neuroside effects seen in earlier CB1 targeting drugs. They're running a phase 2 trial called CBeyond, which includes a combo arm with a GLP-1 agonist to see how much added benefit nimacimab can bring to the table. Now today was a roller coaster for SKYE stock. Shares exploded at the open, up as much as 130% on heavy volume after the company dropped some impressive preclinical data. In animal models, when nimacimab was paired with Eli Lilly's tirzepatide, they saw over 30% weight loss. Even as a standalone, nimacimab clocked a 23.5% drop, putting it in the same ballpark as big-name GLP-1s like Lilly's and Novo's. The company framed it as a major step toward proving nimacimab could be both a solo and combo contender in the obesity treatment landscape. But that initial hype hit a wall fast. After several halts on the way up, profit-taking kicked in just as quickly. The price action reversed hard into the afternoon, and the stock gave up a big chunk of its gains, eventually fading into the close despite still ending up around 30% on the day. So what's the takeaway? Skye's data is exciting and adds some real weight to the potential of nimacimab, especially in combo with GLP-1s. But the quick reversal in the stock suggests this was a classic case of speculative hype meeting cautious reality. The animal data is great, but the real value driver will be human data, which isn't coming until later this year. For now, this was a big moment, but investors are clearly waiting for more before fully jumping in. Our review on ILLR. Triller Group Incorporated is definitely one of those companies that's playing in a few fast-moving lanes all at once. On one side, you've got Triller, the AI-powered social media and live streaming platform that's been building out a creator ecosystem. We're talking music, sports, entertainment, even live combat sports with their bare-knuckle fighting championship. Then on the other side, there's AGBA, their fintech and health tech arm, pushing a machine learning-driven platform for financial and healthcare services. Now, today the stock jumped 30%, and while there wasn't a specific headline grabbing the spotlight, The move feels like a combination of renewed interest in AI plays and growing attention on niche content platforms. Triller's ecosystem is actually pretty unique. They've blended creator tools, live sports, and streaming content with a monetization engine powered by AI. If they can keep that flywheel spinning, creators producing, audiences watching, advertisers paying, it gives them a ton of leverage, especially as streaming and creator-led content keep growing globally. And let's not overlook AGBA. It's not as flashy as the social media side, but it's quietly laying the groundwork in fintech and healthcare, two sectors that are always ripe for disruption. Investors could be looking at the broader Triller AGBA model and thinking, okay, maybe this isn't just a social media company. It's a multi-platform engine with real growth upside. So today's 30% spike might be more than just a technical move. It could be signaling that investors are starting to reassess Triller's long-term potential, especially as AI and content convergence become bigger themes this year. One to watch for sure. Our review on IE. Ivanhoe Electric Inc. is a U.S.-focused minerals exploration company with a real emphasis on copper, one of the critical building blocks of clean energy, infrastructure, and electrification. What sets them apart is their tech-heavy approach. They use their proprietary Typhoon geophysical surveying system and advanced data analytics through their computational geosciences arm to de-risk exploration. Their flagship play is the Santa Cruz project in Arizona, a copper-rich region that already has a strong mining pedigree. Now today, the stock popped about 18%, and it's all about the financing news. Ivanhoe just announced they received a letter of interest from the Export-Import Bank of the U.S. for up to $825 million in potential debt financing for Santa Cruz. That's a major show of support, not only in terms of size, but also in strategic significance. The U.S. is doubling down on domestic mineral supply chains, and this move signals Santa Cruz is being seen as part of that national priority. Investors were quick to react because this kind of backing doesn't just validate the project. It seriously boosts the likelihood of it moving into construction on schedule, with the feasibility study expected this summer and groundbreaking eyed for 2026. Basically, this isn't just talk. It's one step closer to Ivanhoe becoming a real domestic copper producer, not just a high-tech explorer. So today's move? It's excitement with teeth. You're seeing sentiment shift as the market starts to treat Ivanhoe less like a speculative play and more like a company with a real shot at being a cornerstone of the U.S. copper supply chain. Our review on OPTX. Syntec Optics Holdings Incorporated is one of those under-the-radar players doing some pretty intricate work behind the scenes. They're a custom optics and photonics manufacturer based in the U.S., and they're kind of like the tech backbone for some of the most advanced applications in defense, medical devices, and even space optics. Whether it's diamond-turned optics or building out entire optical systems, they cover everything from concept to production. Now, the stock jumped 28% today, and there's a clear catalyst behind it. Syntec announced they're ramping up production of optomechanicals used in advanced miniature aiming systems. Think military-grade optics that require insane precision. They've already delivered close to $600,000 worth in 2025 and are now scaling production up by nearly 50%, targeting an additional $2.4 million worth between now and October. That brings the total value for this product line to around $4 million for the year. And what's interesting here is this isn't just a one-off order. The company expects continued demand as these systems evolve with tech that improves target accuracy and situational awareness, especially for special ops-type missions. That recurring element is what really sparked investor interest today. This isn't just about tech. It's about real, mission-critical hardware that has to perform under extreme conditions. So, from a market perspective, today's pop isn't just hype. It's rooted in tangible growth, visible demand, and a strong validation of Syntec's capabilities to deliver at scale. If they keep proving they can ramp with precision in these high-value, high-performance niches, Syntec might be stepping into a bigger spotlight going forward. Please subscribe, give the video a like, and watch more from our playlist. Thanks.